Hey, I wanted to make a follow-up video to the prior SigmaTron International video that I made. SigmaTron, they reported earnings on Friday, and the way that they have it set up, some companies are a little different. They reported Q2 of 2022 earnings. I'm not sure why some companies follow the current quarter, and some operate several quarters ahead, years ahead, but they reported 2022 Q2 earnings, and the stock respectively, it closed at about $15, which would have been a 50% gain since the last video. But then after hours, they got up to 18.36 here. Actually, I was seeing it closer to $20 on Robinhood app. But that's due to them having a great quarter, but also just investors realizing how good of a position the company is in and how undervalued it was. Even after this jump here in the market cap climbing from it was like 40 million or so up to 64 million based on this 14.94 price, is saying the PE ratio is still a 5.80. And as I've said before, a desirable PE ratio is 15. Anything below that is undervalued. And so that should prompt you to look for problems with the company, but and we'll get into the earnings report a little bit. They don't seem to have any problems. Although it should be noted, someone pointed out to me that there is a lot of hype around semiconductor businesses. People will put their money in things like AMD, Nvidia, Intel, all these little small semiconductor businesses, startups, just because of the shortage. People aren't necessarily correlating what products have supply constraints when it comes to semiconductors and what businesses, SigmaTron International, they're going to help out with necessary automotive chipsets, or help out cell phones with necessary chipsets. Probably not. They're going to go after more niche market like Internet of Things, stuff around your house. We could go into some of their products, but if, for example, we're going to go through the earning report here, and I'll just jump ahead a little. They are merging with a company called WAGS, which is a dog collar tracker system. Here's all the information. And so this is, I wouldn't have guessed that they would have merged with a company like this based on some of the products we were reading on their presentation a couple of weeks ago. But that's an example of a niche market where they're not playing an oversized role when it comes to semiconductors, yet they will be treated more fairly or better than, just because they have semiconductor in their business description. So definitely try to weed out the hype. Climbing 50 to 84, in some cases 100% based on what time you're looking at the stock price, that's definitely cause for concern. Keep in mind they still have a very small market cap. So if anybody with a lot of money starts investing in a small market cap company, you can see it double, triple, quadruple in a relatively short amount of time. If you see a stock like Apple or Tesla or Microsoft start to double, that's more significant because those are trillion-dollar companies. To jump to a $2 trillion valuation is a serious amount of money. But for a 64 or at the time was a $40 million company, for that to double, that's relatively a very small amount of money. So anyway, enough of the caution. Here's the earnings report. I'm going to scroll up to the top here. So their revenues, they increased 30.6 million or 44% to 100.2 million in the second quarter of fiscal 2022. And a year ago, that was about 70 million. So let's jump back to their prior earnings quarter over quarter. Here they're reporting a $85.74 million revenue. Here they're reporting a $100.2 million revenue. So pretty significant jump there. The net income, $3.15 million, and quarter over quarter, $8.8 million. So their revenue increased, but their net income decreased. And I've already read this, so I can go ahead and say that this large net income here last quarter was including payment protection program money that they received, and so it inflated this number a little bit. So I'm going to jump back to the quarter before the last and see what that net income was to get a more grounded feel for the increase in net income. So 2 quarters ago, net income was 1.57 million. And so this 3.15 million is right in line. If we were to plot this on a graph, it would look more smooth of an increase compared to this quarter being an outlier. And the way how PE ratios work is you take the last 4 quarters and you average them together. So this quarter here, 3.15 million in net income. The last quarter, 8.8 million in net income. The quarter before, 1.57 million in net income. And the quarter before that, $249,000. So all of those will get averaged together, and that'll give you your PE ratio. Now, if we look at the October 2020 quarter, that's the one that is being excluded now due to them releasing earnings on Friday. And that was a $626,000 net income. So this 3.15 million will replace this, which is about 4 times greater. So that's gonna lower the PE ratio, which is a good thing for the company. Eventually, this quarter will get phased out, this 8.8 million in 2 quarters, which would significantly raise the PE ratio since this was an outlier in the upper direction. So just keep that in the back of your mind. That's going to be right about August of next year. We should see the PE ratio go up drastically. So if the stock price starts to increase towards $25, $30 a share, right around this coming summer, just know that this quarter is going to get averaged out and the PE ratio will jump. So if the stock price gets up too high and the market value increases too much, then the company could start to look overvalued. It just depends on how the earnings go. Getting on with it though. Let's see, what else is important. So he's saying the revenue line as well as the cost of the products sold were inflated due to premiums. They had to increase their gross profit margins. But after paying the expenses, they pretty much averaged out. But they reported an operating income of $5 million for the quarter, which is a record for income from operations. So they're becoming more efficient. Yeah, here we go. They eliminated the gains from the forgiveness of the PPP loan. Oh, okay, so the money that they owed, they were able to report as income last quarter. And that's why we saw the significant increase in the net income, 8.8 million. It was just money that they set aside to pay back this loan, but that loan payment was forgiven. Okay. So the record results were driven by a strong and growing demand from existing customers. That's pretty key there. People that already know about the business, people that are going to come back and buy more, people that have historically came back and bought more. And you develop a brand loyalty. They also added several new customers. The backlog remains strong. That's good wording there, because backlog is already demand or orders that they have secured. And they're saying that it's strong, so they, using that wording, they're not anticipating any sort of drop off in earnings for the next quarter. So they're citing trade, the trade policy between the United States and China is still problematic, and so they're saying that a lot of customers, potential customers, and just other businesses are looking towards Mexico as a favored supply chain due to the lack of trade tensions there. And the volatility of the electronic component marketplace remains with us. And it's getting worse, not better, which I think that would be better for the company, unless they're citing shortages for their own supply. But from what they did this quarter, and I imagine for future quarters, they're going to adjust their profit margin accordingly so that they, unfortunately, passing the cost on to the customer and making sure that they don't suffer any loss in profitability from increasing supply costs. Let's see. They're saying they're working closer with their customers due to the supply constraints, and they're saying it's resulted in stronger relationships. It's good language. And they reached a new 3-year labor agreement with their production union. So that should lock in a lot of their operating expenses for at least the next 3 years. That's good news. And then here's the merger with Wags, the dog collar company. Pet tech, the pet tech market. So that pretty much opens them up to a new market. I didn't see that in the presentation from the prior quarter. Let's see. Oh yeah, the reason why they were citing Mexico earlier, apparently, and I can't remember where I read it. I think I read it in here. But they own and operate 3 plants in Mexico. So that's why they're looking forward to supply chain crossing over to Mexico. People looking to Mexico for supplies. And you can see the assets increase quarter over quarter. Actually, that's the first half to the second half. And yeah, that's about it for their earnings their earnings report. So I pretty much just found this company because I was looking through SigmaTron and I was looking for undervalued companies based on the search criteria I was putting in. And I looked into this company just slightly through their presentation, and they seem to be on a good path, but they could have very easily reported a bad quarter here and dropped in price significantly. So there's nothing really to finding a stock that's going to increase by almost 100% like that. There's also several other companies I invested in, and I mentioned in one of my prior videos, and those stocks have since gone down significantly. So those were losses, well, are currently losses for me. It's just a look at the draw, and it also depends on how long it takes other investors, namely big hedge funds and market makers, how long it takes them to invest in a company. And this sharp of an increase, 84%, this isn't retail investors. Anybody watching this video, it's not based on any of them buying into the stock. It's going to be a large hedge fund that bought in to move the price this much, to jump from 40 million to 60 or 70 million dollars in market cap. That is probably only a handful of investors that could make a significant move like that. I doubt it's hundreds of thousands of retail investors buying up stock. So yeah, definitely be careful, and definitely don't just throw your money into something just because it's undervalued or you think it's a good deal, because like I said, it's just as likely that the company reports a loss. And especially with a small company, the reason why a lot of people stay away from them to some degree is they're more likely to spend and operate at a loss in order to expand the business, to reach more customers, to be the dominant name in the market. And so a lot of the smaller cap companies, they can be more risky compared to the larger ones, because the larger ones, they already have their name, they already have the market dominance, and now they're going to cut back on their expenditures. They're going to crunch the numbers and try to appear to be as profitable as possible to try to get more investors to buy in. So you could see higher net incomes, higher net margins from some of the larger companies, and these smaller ones, they could be risky because they're more willing to just operate at a loss, and investors get scared by that. So be careful, don't throw your money into anything, and definitely be cautious when you see numbers like this. 84.67% increase in one day. I'd be expecting a pullback. Yeah, it could continue to go higher, and based on the fundamentals, it's still undervalued. But you know how people are. People look at that and they think that's a good selling point. I made my money, let me get out. I almost doubled up. And so I would be expecting some sort of pullback. Definitely do keep in mind that the company is still undervalued, but just depends on how much patience you have, how long you're willing to wait, and how big your appetite is for seeing red numbers it could trend downwards for the next year until people reevaluate, crunch the numbers, and realize it's still undervalued. So just be careful with it. I'm going to go ahead and end it here.